Hey guys, Tony here. I know I haven't posted in like a day or so, but I did want to post right now. Currently, the situation on the dollar and the U.S. dollar. I know there's a lot of things going around. People talking about inflation, deflation, hyperinflation. And especially with commodities running towards the upside, running towards the low side. For example, like gold and Bitcoin, crypto, all that other good stuff, whatever. Everything seems to be kind of correlated with the dollar. Again, the U.S. dollar is the world currency. You would be dumb to think otherwise. So it's very. It's always a good idea to know exactly where the dollar is going to. As far as just kind of like a general basis of like a general base of where everything's kind of going, right? So some of you guys may or may not know, a strong dollar generally indicates a weak market, and a weak dollar generally indicates a strong market. By that I mean a strong stock market, and vice versa. A strong dollar indicates a weak crypto market, and a weak dollar indicates a very strong crypto market. And again, and the same thing goes for commodities like silver, gold, platinum, oil, copper, etc., etc., etc. In the case like what's happening now, I am 100% not yet, but if we do close this week on the bear side, I am going to be 100% bearish on the US dollar. It does look like, if I had to take a quick guess, I would say that we are creating basically a double top on the US dollar, right? And then last time we actually hit highs of $93.30. The highs of this time that we reached were $93 and like maybe a little bit under 20 cents. So $93.20 would probably be the relative highs that we would see. I think at minimum, we might see a full well, not minimum, but I think, if I had to do an actual minimum, I'd probably say like a 618 golden fib level, or maybe like a 61, like a zero point 0.5 golden fib level. So I say minimum, we see a retrace back to like $91.50, somewhere around there. Mid scenario would be $90, and a full bear case scenario would be a full retest of these lows of back here of under $90. And I generally, what I like to do is I like to use historical data to kind of determine where we might see an actual drop or a rally of sorts, right? So, I mean, taking from what happened last time, right? Essentially back on the week of April 5th, we actually created a perfect sell-off, right? We had that reverse MACD being triggered on the low side, basically saying, hey, if you're long on this stock, this ticker specifically, it's time to get out of your longs, which on the other, on the opposite side is basically go short, right? And we also created clear tops on the stochastic. So the thing that we can actually take into consideration here is looking at a higher time frame chart, like the month, right? The month is generally something that you want to look at just to get a gauge of actual momentum. I mean, we've been bullish ever since February, and ever since February we haven't actually really done anything. We've traded a little bit to the high side, a little bit to the low side, but generally it's pretty sideways. We haven't really done much as far as when it comes to the monthly. I mean, if we did something crazy like back in February of 2018, we would have closed bullish towards the upside and kept rallying like all we did back until basically pandemic levels, right? But what have we been doing lately ever since that close? And when we actually closed back in February, so this has been a couple of months, right? We haven't actually closed bearish, but I mean, we've been bullish, and all we've done is really traded sideways. And what have I always told you when it comes to certain months, right? So if you close bullish, right, and on this month you actually, or this general the momentum, right, for the month or the week or whatever, if you close bullish on the month and you have been bullish for a certain time now, and all you're doing really is trading sideways, or for that specific month you start trading down, the next month that you're actually going to see is going to be a hard fall. That usually tends to happen, right? Statistically, if you're bullish and all you're doing is trading sideways, or you're trading to the downside, that's so bad for that specific ticker, because generally what happens after, when you actually start closing bearish months or weeks or days, generally what that means is you're going to see a hard fall. You're going to see a very hard fall. And just on the look of the dollar here, the dollar has been weakening ever since what? We had highs back in March 2020, which was last year, right? And guess what? We had those highs March 2020, but we didn't cross previous highs of January of 2017. It actually made lows. It actually made lower lows, right? For the most part, the dollar has been trading sideways. It's actually been going down ever since, January of 2002. So we traded down for a while, recovered a little bit for COVID, for actually 2016, and then recovered. We didn't recover as much for 2020, and then we're basically trending down now. I would guess that the dollar is going to continuously fall to the downside as opposed to going towards the upside. The momentum is there that lets me know that the dollar is going to keep falling. And with the week most likely closing on the bear side of this week, it looks like this is going to be the start of another fall of the dollar. And if I had to guess, I would say that we're headed back to around, under $90 in the next 60 days or so after this Friday's close. And it's just what it looks like, right? We have plenty of things going for us right now. We have the 50 MA under the 200, which basically tells us, hey, you should only be looking for shorts right now. That's all you should be looking for. You should be looking for shorts. I don't really care that price went over the 50 MA. I don't really do my TA based off of price being over the 50 MA, over the 200, under, whatever that does. I don't really care about that. It's mostly just about support, historical movements and momentum, and generally it's mostly just based off of momentum, like bull power or bear power. That's really it. You guys know that I'm not really a short-term trader. I look at long-term trends or longer-term trends. It's mostly weeks or months or so, depending on where things I feel are gonna go, right? But essentially what's going on here is we're creating double tops. And now we're not just creating double tops on actual price, we're creating double tops on the Stoke. I mean, we have the first top, we have the second top. It looks like we're actually gonna be crossing over. And then my reverse MACD is giving me signals to, hey, if you're long on this position, you better start closing your longs because this thing's about to go down, right? And another confirmation is the highs of March 29 for the week. Again, these highs from the previous peak was $93.43, whereas the highs that we saw last week were $93 and 20 cents. But the thing is, I think that might actually be the high of this peak, of this mountain peak, and I think we're going to be basically going down after this. I think that the dollar is going to go back to under a price point of under 90 within the next 60 days. I mean, within the next 60 to 90 days or so. And there's just a lot of confirmation right now. I mean, I even looked at the RSI. There was a little bit of an exaggerated divergence. But for the most part, we do have a couple things going for us, Let me see if I can, set this up for you guys. Because, number one, we have, the 50 MA under the 200 MA. Number two, trend is down. Number three, double top on the Stoke. Number four, double top on price. Number five, failed to create new highs on new peak, right? We failed to create new highs on this new peak for the weekly. And number six, we already have plenty of confluences to actually take this position, right? But I want to start doing this so you guys understand why I do the things that I do. Usually when I have 3 or more confluences, I usually take the trade. And I use that historical pattern to let me know what I think is actually going to happen. For number 6, this would only happen on Friday, right? So the reverse MACD, my indicator, right, my built indicator is telling me, hey, short. It's saying, sell longs. And number 7 would actually be the red line crossing over the blue line. So Stoke red over blue, right? I'm gonna see if I can make this a little bit tinier because it seems like it's gonna be a lot of things going on right there, right? But for the most part, this is everything that we're looking at right now. Let me delete that because we don't need it. But for the most part, everything that we're seeing right now has a bunch of confluence going on, right? So we have the 50 MA under the 200, which is this red line under the 200, which lets us know, hey, you're just looking for sells. The trend has been going down for a couple of years. We have that double top on the Stoke, which is down here. We have the double top on price, which is right here. And apart from the double top, we actually failed to create new highs on that peak, right? Even if it's a little bit lower, we still failed to create new highs or even match previous highs, which is an indication that a lot of people fail to actually tell. A lot of people say, "Oh yeah, double top." This looks like it's a double top. It's gonna go down, but a solid indicator or a solid leading indicator of a double top being created is that the peak fails to break past the previous highs, right? And a lot of people don't tell you guys that. A lot of people don't talk about that, and I see like 95% of the time that it's a double top, it ends up being the second peak ends up being lower on the high than the previous peak. 95% of the time, that's what it's going to be, and that's how you know, hey, I need to get on this trade, right? I need to get on this trade. This is what it's going to look like. Again, the reverse MACD is telling me to sell my longs. We haven't closed the week yet, so we can't use that as confluence. And number 7, we have on the Stoke is the red over the blue line. So we actually need this red line to cross over the blue line and the blue line to go under. So right now we only have 5 confluences. We still need 6 and 7. So I would only take this trade on Friday when I know for sure that the dollar or the DXY is going to be closing bearish. And then again, we would use this historical pattern of what happened last time. We're generally in the same spot, right? Like where we were last time, we were at a 0.387 on the reverse MACD, and again 0.387. We're around that same area. So I would generally say that we're going to be looking at another drop back down to somewhere under $90, or at least to this order block of $90.30 or so. I definitely think that the US dollar is going to go down. So I'm very, very, very bearish. I'm very sure. I want to be very short on the US dollar, and in turn, that means that I should probably be very bullish on anything against that. So basically, any other currencies against the USD, I should be bullish on crypto. I should be bullish on gold, on silver, on copper. I should technically be bullish on the stock market, because if I think the US dollar is going to be going down, that generally means the stock market is going to keep going up, which is weird, because there's a lot of things right now that are showing the complete opposite. Like, why is the dollar right now turning bearish when banks are looking like they're going to be selling off, or the stock market looks like it might be selling off, or crypto still looks bearish? It's a lot of weird stuff going on in the market right now, which is super, super confusing, because usually you would see everything that's happening right now not happening in an inverse way, or not happening altogether. So if you were to see the dollar starting to like for example, technically right now, ever since like May, technically the whole market as a whole should have been selling off. But it's really only been smaller cap stocks in the market that have been selling off, whereas tech has been rallying like crazy. And the SPY has been rallying like crazy, right? It's still rallying, but like I said, I am gonna be bearish on the dollar if we actually end up closing, bearish on the week. And if anybody is looking to buy puts, you can actually play DXY, but UUP is the actual index that follows the US dollar. So again, if you're looking at actually being bearish on the US dollar, this would basically be your play. You would be going into the UUP and you'd be shorting it down to somewhere like $24.30. I would say maybe to back to these lows of $24.17. Also maybe that order block at 24.30, right? So I would definitely say that if people were going to be short on this, I would probably be buying puts that at least break even like at 24.50 or something, so I can at least make some money on that drawdown, on that drop down to 24.30, and for a real bear case scenario to 24.16. And again, the DXY and UUP are basically the same chart. They're both following the dollar. The DXY just trades on a different platform, where the UUP is going to be traded, generally on your average broker, like Robinhood, Webull, E-Trade, Fidelity, whatever, right? But again, if we close Friday on the bear side, I'm gonna be 100% bearish on the U.S. dollar, basically tanking back down to like April, May lows. So super crazy stuff that's happening right now. There's a lot of things that shouldn't be happening right now, and everything is just kind of weird and fumbled all together, which is absolutely insane. And it's fun to watch. It's exciting, but there's a lot of things that shouldn't be happening. It's basically like saying like it's super cold outside, but the water is warm. Like that's how weird the stock market is. Like it's like if the weather is freezing, right? If you go to Antarctica and then you find out you get in the water and it's like, the temperature feels like a regular pool, as opposed to you basically, dying of, whatever super coldness of water or whatever, instead of freezing to death, which is weird. That's the best analogy that I can give of what's happening in the market right now. Everything is just it's just up in the air. Everything is what it should not be, and it's super weird. But we gotta wait for Friday. I think if Friday closes, like I said, if Friday closes bearish for the dollar, I think it's gonna go down, and that might mean that crypto might actually rally, as well as other commodities from here, and maybe even the stock market goes even higher. I don't know what's going on. Super weird. See you guys later. Bye.